Hello, YouTube. Today we're going to talk about big tech and the potential big move which is going to come. We just had Apple and Amazon report earnings, and we note that Amazon is up by nearly 7%, and Apple's a little bit mixed. It actually beat on earnings, but it is slightly down. So we're going to talk about exactly what this means because we have a really important economic data point coming out pre-market tomorrow, which is the payroll number. And we've been talking extensively about hollow candles and lower lows. So we're getting a warning of a potential big move because we are right here on our uptrend. And the question mark implies that we're not entirely sure what's going to happen. But after we saw that big downgrade yesterday, there is a little bit of volatility in the market. Here's something I found particularly interesting today, too. We actually pumped up from 66 to 74 for fear and greed. We were actually flirting with extreme greed earlier today. So if we're going to get a bull push to start right now, we should be looking for us to go back into 75 in fear and greed, and going into extreme greed starting again tomorrow. So we've been talking a lot about the seasonality chart too. Some people say it's silly. Some people like to say it's the Bible. I just like to look at it as a guide. So we were looking for maybe some kind of pause, which is kind of what we saw today. Arguably, that's what happened, was a pause. So we filled the daily gap. We look at a line chart. It looks like a pause. That's what it looks like to me. So if it keeps working, I don't care what people think. I'm going to keep using it. A little bit of a pause here, maybe a dead cat bounce into tomorrow. And we're slightly green in after hours, up by about 0.1%. I'm not sure if it's going to hold. We're probably going to have to wait and see what happens on the conference calls for Amazon and Apple. But so far, it looks like this is the period where we should start going sideways. And you will remember that yesterday we talked about those invest algos, SH and PSQ. And the reason why those ones were important is because if we were going to get the start of a crash, which is what we talked about yesterday, it's really important that we know what the recipe is. It's just three things. And as a reminder, this is what we talked about yesterday. We mentioned that we were going to give you some hot tips. We had a few people join our group. Thank you for giving us a try. But specifically, we're talking about SH, PSQ, and VIX. So when SH, PSQ, and VIX say they want to go up, that pretty much means the market wants to go down. So far, we got a whisper alert, which pretty much just means that it's trying to go up, which means the market is trying to go down, but it hasn't yet actually confirmed that move. So when we look at all these charts here on the weekly chart, it appears like if they're going to go up, it appears like they're at least trying. They're very soft, they're very weak, but they're trying to be a little bit less weak. So what that means is if we're going to be getting that bigger cut, we're looking for something like this. And there's a very simple pattern. It is two red candles in a row, and then a weekly lower low. So we're going to come back and talk about that in a moment here when we look at our weekly chart. But before we do that, let's just get the rest of this news out of the way. So today we had Amazon, Apple, and I'm going to ask for a huge favor. I forgot to do a little bit earlier. If you wouldn't mind, please and thank you, considering smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. We put out stock market videos every single day to try to help you. Coinbase down, Airbnb down, DraftKings up, Cloudflare up. And then we also had a Atlassian report today, a cloud company up double digits. It's been a pretty impressive day overall. So mixed with these two, but net, if we just look at the S&P, it's up by 27 cents or 0.1% basically. Looking at the Qs, we are up by about the same, 0.1%. So it's a nothing burger, but I think that with the push-pull we've been seeing in the market recently, we have to make sure we're aware of the pattern which could actually take us down. So what are the Apple numbers? Let's have a look here and see. EPS, 126 versus 119, and revenue, 81.8 versus 81.69. So, and that's down 1% year over year. So what a lot of this comes down to is something that is very peculiar. And I say it's very peculiar because something that's been happening with the S&P 500 is this, where we look at the 2/3 of companies reported, this is as of yesterday's close, where earnings performance, they're actually lower by 5.4% versus last year, but they're 7% above the expectation. So again, EPS is based on the earnings per share estimate. So whether or not Apple beats is relative to its estimate. So 119 estimated and 126 for EPS. Here it looks like revenue is beating, but it's actually down versus last year, which is the theme for a lot of these companies. Earnings, revenue is down, but they're up versus expectations. So what that means is that they've lowered the bar. So let's just go to a clean chart here, right? They've lowered the bar so that, let's just go here, right? They've lowered the bar. So like, oh, this is our growth. Let's get to a brush. There we go. This is our growth. Ooh, that's our growth. And then when they beat, you're like, oh, it's good. But relative to where they were before, it's not so high. So that's the easiest way to try to explain this with Apple. Let's have a look at Amazon now. Amazon earnings are out. Here are the numbers. EPS of 65 cents. That would not compare. So that's way over the 35-cent estimate. 134 billion was over the 131. Let's just refresh the page and see if it's been updated. I'm recording this like literally a few minutes after this came out. There you go. 65 versus 35. That's a crush. 134 versus 135. That's also pretty good. They break down a few extra numbers, but that's pretty much the reason why we're seeing the heat map here and after hours show that we're seeing a move higher for Amazon and a move lower for Apple. It's just that they beat the estimate, but they're not really beating the last year's performance. They're better than the average at negative 5.4, but not quite enough. There's also some news with Donald Trump today. I don't really want to get into that, but it's something that's really impacting the market. So let's just get through the rest of these here. We had a few other economic data points we're looking at. Notably, there's a big star. That's my attempt to draw a star. If you like it, smash a thumbs up. If you don't, smash a thumbs up. Drop me a comment, please and thanks. Looking here to the data, this is the most important one. It is called the Super Bowl. It is going to be non-farm payroll going back to July, and we're looking for the unemployment rate. So as we look forward to the number we're expecting for tomorrow, we had some ISM numbers today. We had the ADP non-farm payroll number come out tomorrow. Honestly, I don't know if we get a good number, if it's going to be interpreted bullish or not. I think we want to see a Goldilocks number. I don't think we want to see a crush, which is like what we saw with GDP. With ADP, because right now our GDP number is coming in at 3.86. That's like very, very high. The risk is that the Fed's going to have to do even more. So average hourly earnings, non-farm payroll, unemployment rate, that is what could be leading here to our seasonality chart. So let's make sure we pay attention to those numbers coming out at 8:30 tomorrow. So what does that mean? Hey, we're talking about QQQ and SPY as if these prices are going to hold into tomorrow. I don't know they will. Might go higher, might go lower. Why? Well, there's going to be a few things. So the first thing's going to be, let's just go back up here to the top so it's easier for us to follow along. So the first thing is that we got the earnings from Apple and Amazon. So something's wrong with TradingView. Apple and Amazon earnings are out. We saw both of them. So far, the market is flat. It doesn't really think it's bullish or bearish, net. Now we're going to have the earnings calls, which means we're going to hear from Tim Cook and we're going to hear from Andy Jassy. They're going to tell us how to interpret the earnings, which means we're going to hear about their forward guidance. What do they think the future looks like? Why? The stock market is a future discount mechanism. So it wants to know what's going to happen tomorrow, but it wants to pay for it today or discount it today. So then that's going to be the second thing. Then we got payroll numbers and unemployment numbers and non-farm payroll coming out tomorrow. So unemployment and all that good jazz. So we got one thing down, but we got two to go. And that's like really important. So there's a lot of volatility potential. But I think the bears have made some pretty good progress this week because we've got a, what's the high? 38471. That's a bearish engulfing weekly candle. And last week's low, 374.39. So even with the movement after hours, we're actually still below last week's low. That's a bearish engulfing weekly candle. So bearish engulfing weekly candle is not, it's not enough to say the bear market is starting or there's another crash, but it's a good start. And when we look here to the pattern, we can note and see what's going to happen here. So like I mentioned before, we'll go back to SPY, but we'll just show the same example on QQQ. So we're looking for two things. We're looking for 2 red weeks in a row and for at least one weekly lower low. That happened 1, 2, 3, 4 times this year. That was each wave. And when we talked about that, the platform where we showed you those SH, PSQ, and VIX alerts, again, I'll just show you those one more time here. Let me just do the search so you guys don't see everything else. We track like literally thousands of stocks. And these are the ones that I just think are relevant for right now. So we're going to look at week to date from the 31st until the 3rd, which shows us right here for investments, which just means on the weekly chart. And these three here are flashing a pretty big clue, a pretty big theme. And then next week, we would have to confirm it. So to make the story very simple, what this is telling us is that the market wants to go down. This week, we're thinking, hey, I'm ready to go down. And the next week, hey, I'm ready to go down. So what that would mean is we have our first red week on the S&P right now happening here. And then we would get a second one. So if we close near the low of the week again next week, there is the potential. It could be a small dip, it could be 3 red weeks, it could be 4 out of 5, it could be 4 in a row, or it could be a crash, right? I'm not sure. So that would be the seasonality chart versus this pattern right here. And we had the second pattern we were looking at on the monthly to tell us what we would be looking for. How do we get to all-time highs? So we are going to have a stream tomorrow as well. You can come tune in with me, Justin from YouTube, and we'll talk about whether or not it's a crash or a pump. I will change the thumbnail depending on whether or not it's green or red tomorrow. So please come hang out with us if you want. But otherwise, we hear from Elon Musk. Just has to make sure that he gets his little jabs in. So Elon Musk says Treasury bills are a no-brainer. He hasn't bought any though. He's the richest man on the planet. So I don't know. Let's listen to what he says, but watch what he does. Musk's voice joins growing chorus on Treasury market, and this is because there was an argument. There was a discrepancy between Berkshire's Buffett saying that I'm buying Treasury bills every week or T-bills. It's just a matter of whether we're buying 3 or 6 months. And then Bill Ackman saying, I am shorting the 30-year bond. If all that stuff doesn't make sense to you, don't worry. It just means Elon Musk is trying to pump Twitter up to make it the platform everyone wants to go to. Let's just go back to that to this pattern here, because this is really what's going to drive it. These ones tell us that this week we're trying to go down. If we're down next week, that's the potential for either a little bit more of a dip or the crash. So now let's go through that pattern here on SPY. So the few things that we've been talking about specifically are, okay, perfect. I thought I lost all my levels and stuff. All right, anyways, you can see this yellow circle over here corresponds with a question mark over here. That's just because I'm not sure if this is going to be a pivot, which is going to be bullish, or a pivot that's going to be bearish. Well, what we would be looking for mathematically would be either a retest of 480 or that all-time high, or the 100% retracement, or for us to go back down to the 61.8% retracement at about 430. So we're looking for about either call it $30 higher or about $20 lower, back down to 430. I'm not sure which one's going to win. So let's actually just double check the math there. Let's see. We got about, in terms of upside potential, man, you got to click twice now. Come on, TradingView. Looking for about $28 higher or about $18 lower. Yeah, that's right. So we still have more upside. We're right on support. I joked about it last week. What do we do on support? Well, you guys know what to do. It's time to sell. So I'm wondering whether or not people are actually selling. They're getting greedy. Maybe they're not. So as I look here on the weekly chart, we noted that that pattern we just looked at is looking for a few things. So we're looking for 2 red weeks. So I'm going to put a caveat beside this next note, because I am going to assume we'll do the stream going into the close tomorrow, but I'm going to assume that we're going to close red. We'd have to pump all the way back up to 458 to not, or a 10-point rip. I don't think that's going to happen, but this market has definitely surprised me before. So number one, we got the red week. And what that also means is that the hollow candle signal the expansion is continuing. So right now the expansion is on pause. What are we doing? We're consolidating on support. So it's that simple. If now we think about the lower lows are a warning, well, we do have a lower low. That's a warning. In the past, by having a lower low, it was not technically going to be a warning, because we actually had a failed breakdown turn into a bullish engulfing candle. So that's a big difference here. A lower low does not automatically mean we're going to go down. It's a warning. We get 2 lower lows in a row, though, like that pattern we just looked at shows, which means one more red week. If we're closing near the low of the week this week, it implies we're going to have a weekly lower low. That's how we can have a corrective wave, which could lead us back down to our August high at 432. So I don't know where we're going to go. I'd love to be able to tell you exactly what is going to happen. All I can do is give you the probabilities. So when we look back here to our daily chart, from where we were back here at the beginning of the month, I was looking for a roughly 3 to 5% move. We're still looking for about that. A 4% move takes us right back down here to our 50-day moving average. And I would love to see that test happen. Come back down to here, and then to be determined. So, and I don't know what TradingView does. They make updates like every damn day. They don't tell you either. So come back down to the 50. Maybe we dead cat bounce. Maybe we go back down to the 50. Then maybe we rally up into September and beyond. Sell in May and go away. Come back on Labor Day. So with that said, thank you for tuning in. Tune in for the stream tomorrow if you want to. Come hang out with me for the final hour. If not, watch the weekend deep dive, which gave us a perfect clue in terms of how we were going to get here, and if you want to do a postmortem. Thank you so much for tuning in. I look forward to seeing you tomorrow.